All right. Officially, good morning. Happy Sunday. Welcome to Market Watch Group Sunday Market Insights. My favorite day. The chimp is asleep in the cage. The professor gets some good quiet time. Question from Steve C. I placed the ADM on Friday and it filled, but I placed it for day instead of good till canceled. Is there a way they would change that to GTC on Monday? So you're saying if it didn't fill on Friday, what would they have done with it? Nothing. It would have canceled on Friday. Like anytime you have a day order, if it gets to 4 p.m. Eastern and that order doesn't fill, all day orders cancel immediately. And you'll actually get notification of canceled orders. So, and then you would have nothing for Monday. So you would have to then replicate that day order for Monday. But Steven's right, since it filled, nothing required. But that's, so anytime you put in a day order, it basically is like, let's put this in, give it a shot for today. If at the end of the day, nothing happens, the expectation is you'll reevaluate. And then either try again or leave it as it is. All right. Sunday Market Insights. My name is Scott. I'll be your host. Disclaimers. As always, what we do is for education, illustrative purposes only, not intended to be a recommendation to buy or sell any security or financial products. Decisions made should be done at your own risk. We're not brokers. We're not advisors. What's our agenda? Let's posture this market and see what changed. My expectation is a drop. Quarter to a half a point is kind of where I was thinking it might be. Just an ebb. It's not really not even really a pullback, right? If it's less than a point, we're not like, oh, the conditions are changing fundamentally. It's like, we're sensing a little something coming in potentially. I see a potential hedge setup on the VIX. It's a potential. Just because we see like, oh, this could do this doesn't mean it's going to happen. It means we're going to be watching closely for that. Economic calendar. Let's look at what information's coming out. I believe it's inflationary data. Does that sound right? Okay, so on the Friday, Steve C, the order filled on Friday and you bought 3 contracts, or nothing happened and you had a canceled order. If it filled, you're good. If it never hit your price that you set, then you would need to reinstitute the order. So you should have the position. If you have the position, no need to worry about the order. Okay. Oh, it filled. Perfect. Nope, you should be good to go. Good to go. We'll look at the economic calendar. We'll run through sector rotation in order to determine which sectors we may need to flesh out a bit in our watch list. We'll see if there's any watch list maintenance that needs to be done. We'll start building. I'm pulling a note card out as we speak to be ready for our opportunity list for next week. And we're already down with the first section of this trading plan loop. Moving from the personal summary to market posturing. So know thyself. Step 1, know thy enemy. Know the market. Section 2. Okay, let's get to it. Did I say good morning, Vladimir? I probably did, but good morning again, just in case I didn't. All right, let's get to a 6-month daily chart. There's the VIX. You can see the higher low, subtle but forming, which is a little different than what we see on the SPY. The SPY touched a higher high. So there's that. So there's that. Okay, let's keep going. Let me find my posture log. Okay, this is where I thought sector rotation could increase a little bit. I thought the VIX could decrease a little bit. I think I thought volume could decrease. I didn't mark it, though. I don't know. I'm getting into coloring things and whatnot, but all right, September 7th. This actually belongs here because this was the prediction from this one. All right, there we go. There we go. All right. Let's get to it. And let's take my chart out to a 3-year weekly. 3-year weekly. And what do we see here? What do we see here? Nothing. Nothing changes. We're right moving in line. It needs to get all the way up to get me an increase. It needs to, if it falls back to here, I'm still going to keep it at that current level. So, yeah, I'm going to say nothing. It's a solid score. And that's it. Anybody have any questions about long-term charts? Let me know. Okay, let's keep going. That stays the same. Let's go to 6-month daily. Let's see what this looks like for us. So last week we dropped this a 1/4 of a point. And I gotta say, I feel like that's still at play. There's nothing else that happened. Last week we basically held this. What just happened? Let me change my color. Okay. I would say this kind of feels right for the current. I mean, it's not a super strong. But if this is a 3 and this is a 2, I don't know why I can't draw a line. There we go. If the top one's a 3, 2, 1, 0, right? This is a 3, this is a 2, This is a 1, this is a 0, and then it would be the same thing the other way. Yeah, I think that makes sense. Still in the channel, I agree. If somebody said, you know what, Scott, my score is a 1, I'd be like, yeah, I can see that. I don't see there being enough to change my score, especially considering we touched a new higher high. We got all the way to the top of what we had thought the score or the level was. So, yeah, no, I actually feel like that looks great. 1.25. Did anybody change anything on their on their long-term, short-term trend combination? The highest we've been is 2.75. That's the highest we've been recently. Upwards is the key. I agree with that. The 6-month daily is just a slow grind upward. So, agreed. It's showing us that it is a sustainable short-term trend. So I think that it looks just fine. Perfect. Okay. Let's keep going. Let's see about volume. I think volume is the first place that I thought there could be a shift. No. This was the key day right here, Friday. And even when we finish, sometimes the volume keeps coming in. So you can see we definitely got volume. Average was 65 million. We had 85 million. So it was 20 million extra. So that was like 30% extra volume, which means it definitely gets one of these. But does it get a B, an S, or a T? Now, this is where we constantly end up in good, lively discussions. Because it's a red day. So what is the natural inclination? Let's make it a sell. It's a sell day. It's a red day. But we're a little bit more subtle for that. Right? Now, here's what happened. That's where it started. Right? That's where it started. That's where it ended. The buyers pushed it a little bit from where it opened. It opened and they pushed it up a little bit. And then the sellers came yanking it down. They're like, no. So the sellers definitely had more impact on the day. The buyers only got this little piece. But you could also argue that they recovered this little piece. Because after the sellers took control and pushed it all the way down to this engulfing level, I mean, it completely engulfed the prior day. What happened? The buyers came back in late in the day. I'm going to go to a 5-day, 5-minute, and you can see late in the day, even at the last little 5-minute candle where it popped from 646.40 to 647.20, that last little 80 cents, that helped. If it had stayed down in this sub 646 level, we probably would have ended up scoring it. I probably would have ended up scoring it for the sellers. But this is an easy one for me when I come up and I look at this. What is our threshold? 0.5. In order for us to be like, ooh, look at this. Remember, these are days of conviction. When we're looking at volume, We're trying to understand who is showing more conviction in their positions, buyers or sellers. And we don't look every day. We say when there is a day of significance, what makes a day of significance? 5% above average volume. That's all we need. It doesn't have to be 20%, 50%. If you do that, you'll never see it. 5%. If it's above average, it's significant. And then we say, did somebody show some sort of a higher level of conviction? And the answer is no. It was only down 0.3 from the close. Remember, we're going from, let me change my color first. We're going to go hot pink. We're going from this is our close to this is our close. Close to close. From close to close, what happened? Down 0.3. 0.3 is not enough to say that is a day of conviction. It was a day of tug of war. The buyers opened it. The sellers yanked it down. Buyers pushed it back up. What role, if any, do market makers play? I mean, really, not a ton. So you've got to separate market makers from institutions. So market makers are just there to maintain liquidity. Their advantage is they buy the bid and sell the ask. So they make their money on spreads and volumes because they have that advantage, right? You buy the ask and you sell the bid, and the difference goes to the market maker. That's kind of his commission. So he's on the other side of that. And they constantly are monitoring inventory as they take position on one side or the other. And they really are more like a bookie, right? A good bookie shouldn't care who wins. They just manage bets. So if everybody's betting on one side, they raise the odds to do what? To try to get someone betting on the other side so that one bettor pays the other and they take the juice. There's a little bit of juice in there, right? And so the market makers really are just all about maintaining liquidity. Now the institutions, and here's the thing, can there be institutions who have both their own institutional objectives and they also have market makers that are on the floor? Yeah, of course. Of course. It used to also be analysts, and there was a whole incestuous relationship that they were like, no, the government had to step in and be like, no, you can't be an analyst, and they had to like separate the conflict of interest. But institutionally, we definitely have now. That's we definitely have interest in the institutions. You'll hear people talk about like these days there could be 20 to 30, even up to 40% of daily volumes trading in dark pools or black pools that are like outside of the market. And there's definitely some interesting things that have gone on. But overall, the expectation is that 90% of money moving at any given time is institutional money. But they're always looking for some kind of an advantage. Is there a publication on the process involved, like between institutions and market makers and things like that? Not that I can think of. It's, the institutions always try to play it pretty close to the chest, right? They're not big on transparency. But you can see that, we just want to, essentially for me, we want to look at the institutions as the Titanic. And when we see them start to go, our advantage is they're slow and we're fast. So does it feel at times like they yank it day to day? Yes, but overall, that's where the opportunity for us is created and lies in the momentum that they create. What percent am I looking for between the two closes? 0.5. 0.5. If it finished down here, we would say the sellers won the day. And if it finished up here, let's see, about where, I mean, it was there for a little bit. If it finished up here or higher, that's a B for me. Here or lower is an S for me. But if it finishes, like in this range where it's less than 0.5% to either side, then I call it a tie. It was a tug of war or a tie. 5% volume. Well, we evaluate it at 5%. It's just that we give it a T if it doesn't get above the half or below the half in order to score it one way or the other. So we just are like, oh, that's a tie. Well, for me. Now, someone might develop a slightly different way that they score it and say, I'm going to do it like this. Great. You should. If there's an itch you have about posturing, you should scratch that itch and be like, I'm gonna think about it a slightly different way. Okay. So, good long explanation that leads me to let me zoom in. Leads me to this. T. So, what do we have? We have two sells. That's this one and this one. Two buys here and here. Two ties here and here. Which is, so you look for a $2 drop or a $2 rise. So that right now is more like about a 0.33, which means technically it didn't, right? Because it was only $1.88, I would assume. And it's a funny thing because if you're like $2, then what do you do if it's $1.99? And that will happen. That's just sort of why we analyze and we say, well, how strict am I? But this equals a tie overall. Tie goes to the buyers. That's my score. I thought that might drop. If this had turned into a sell day, it would have been a 3 sellers, 2 buyers, 1 tie, and that would have been a 0. A 0. And then if it went to a 3-1-1 or a 4-2-1, that would be a minus 0.25. So my final score is there. That was one that really was down to the wire on Friday. But ultimately, that score stays the same. Okay. Major market. Yeah, this was a pretty wide range. I said this could be anywhere from a 0.5 point down to a 1/4 point up. I don't know why I thought a 1/4 point up. I really don't think that could be the case, but I don't know. Maybe shocking things will happen. Okay. Fed watch is at 100%. And you're like, no, Scott, it's only 89. That's 89 for a 1/4 point and 11 more for a 0.5 point. So definitely at 100%. Definitely at 100%. Let's look at the calendar while I'm here. We'll work our way over to the other side. Manufacturing on... Nope, that's too far ahead. Minimal reports. Monday the 8th, we have consumer credit. Nobody really cares. Although it's interesting, we had 7.4 billion and we're thinking it's going to jump to 15. That's kind of a big jump in credit usage. The optimism index. Ooh, that's actually supposed to jump up a little bit. That's shocking to me if that happens. Wednesday, PPI. Wednesday PPI, and this is looking to see a pretty big drop from the surprise 0.9. So I don't know where they're getting that from. That would be great. That would be very helpful for the Fed to have that stabilize. It makes their decision much easier. Let's see. What else? PPI. Okay, and then we have CPI on Thursday. The CPI, which did not unexpectedly rise last month, is expected to rise this month. 0.2 to 0.3, 2.7 to 2.9. Core CPI expected to stay the same. Yeah, no, this is kind of an interesting thing because they quote the rate in a quarter point range, 4 to 4.25. Right now we're at 4.25 to 4.5. So 425 to 45 down to 400 to 425 would be a quarter point drop, and then down to 375 to 400 would be a second drop. So the current rate, if you come down here, you can see 425 to 450 is current. This is the first. That's a quarter point drop. That's a half a point drop. So no. Current. They'll always express it like this in this 425 to 45. This is the actual Fed rate right here, 425 to 45. They always express it in like this quarter point like range. So this is where we are. This one is this one. This one is this one. And that is 0.25 on this side. And this is minus 0.5 on this side. There you go. Hopefully that's helpful. Okay, we know the calendar. We know the Fed. Let's go look at sector rotation. Let me make sure I'm all the way over. And what do we, or not sector rotation, sorry, major market analysis. Major market. Let's just see what we have going on here. Okay. We've got the NASDAQ still convincingly on the top. S&P in the middle at the watermark. From the longer term, we can see the Dow and the Russell. The Russell has completely caught up. It was well below it, but it's accelerated. So we would imagine that we see that acceleration as we zoom into these lower time frames. So let's go down and see 133. Now, when we look at 133, you'll notice we've got the NASDAQ here, and then look what we have. We have the Russell moving into a secondary leading position. It's not leading like the NASDAQ, it's a secondary leading position. It did move ahead of the S&P. And we have the Dow down here lagging. No surges from the Dow. Why is that important to us that we don't see those surges from the Dow? Because surges from the Dow, we would be interpreting defensively. We don't see that. So whatever pause we see the market going through, what we don't see is the market posturing itself or aligning itself in a more defensive fashion. Okay, let's keep going. Now we get down to our scoring time frame, and what do we see here? Ooh, look at the Russell. Look at the Russell. moving into a leading position for the second time. Second time frame. So on the 133, moved into that leading position. We moved to the 66. And it actually is not just a secondary leading position, but a primary leading position. Now here's the thing. I'm already at a 0.75. Is this enough for me to be like, this is as good as it gets? No. No. It definitely maintains, right? It definitely maintains the 0.75. But as Sandy says, I'm fairly reluctant to raise my score to a 1. Because once I do, it can't get any better, and I just don't think it's there yet. That's me. Give me your thoughts on that. Did anybody raise theirs to a 1? So what would put it there? It would have to go all the way back to the 200. If I have small caps in a leading position across 3 time frames, then I would do it. But I don't, right? So that's my concern right now. Yep. So if we go back to 200, then we can see the small caps are still lagging there, right? Still lagging there. If I saw this come up a little bit longer, well, I mean, yeah, it technically, like, I put those sort of at a tie. More like a tie for me. Okay. More time. That's exactly how I see it. Needs more time. Okay, let's keep going. And then let's, I don't think we got to the 22. And even though press is here, or not here, I want to make sure I hit that. So there's the 133. We have it moved into a secondary leading position. That's for sure. Then we come here and we have 66 days. There's where it should be. And then we come to 22. I would definitely expect it to be leading on the 22 by quite a bit. So what do we have going on? Well, what we have going on is the we have the interest rate and the market responding to favorability that the interest rate is going to come down, and that's going to benefit small caps more than anybody else. So, all right. Thoughts, questions, concerns about what we have right now with this analysis? Let me know. Okay. Pretty good, pretty good. We're in the range of agreement. I accept that. I accept that. Okay. Are the large cap? I don't think that they're necessarily exhausted. What I think is that the large caps are just not showing any appeal from a defensive standpoint, right? From a defensive standpoint. Okay, let's keep going. So what's the final? I'm leaving mine at 0.75. all that for me to leave my score at a 0.75. Did anybody raise theirs to a 1? That is a question I have. Okay. Steven raised his to a 1, as did Tony Z. Got it. Fair enough. I'm not going to argue it. I get why. I get why. Okay. Let's go do the let's go do sector rotation. So that's a 0.25. Actually, I think that one could go up. Let's go see. Who do we have on top? Communication services are on top. Technology second. There's the market. So there's only 2 above the market at this level, at this time frame. Then we have who's close. Discretionary's close. Industrials are close. Financials are close. Utilities are in that secondary mix. And then you have everybody else down here. Okay. Let's keep looking. If I could get this to update. There we go. 133, what do we have? Technology, industrials, and communication services. So now we have 3 growth sectors and discretionary close. And who's next in the order? Well, we've got financials and utilities a little below that. So nothing bullish in that mix. So that's favorable. I think this thing could rise up a level. Okay, let's keep going. Let's drop you down to 66 days. And I've got communication services on the top. I've got energy next. And then looky, we have discretionary, who made its way into this position here where it's starting to lead. That might be enough. That might be enough for me to go ahead and raise this 1/4 of a point. Give me your thoughts. Is that enough? Stephen D is getting aggressive. I think I'm going to go ahead. I think I'm going to go ahead and raise mine to a 0.5. I've got communication services still. I've got technology. And now I've got a third group popping up in there. And coming from the 133, I think that has enough for us to do it. El Jago said no. Steve C said mine didn't change, but this makes sense. Okay. Okay. Let's pop down to the 22 just to see. And on the 22, what do we have? We have communication services. Then we have healthcare. Then we have discretionary. Then we have basic materials, energy, financials, and then the market. What's one of the problems that we have on the 22? One of the problems with the 22 is that we have technology has dropped off pretty far, as has industrials. Not at the very bottom, but definitely has lost a little ground, right? Yeah, it definitely has lost some ground. Yeah, I don't know. My thought on this is I think it's enough. I am going to kick mine a little higher. 0.5. Which you can see is what had me thinking, hey, maybe this thing does kick above. I think I actually had that as green. But is the 22 significant? No. No, for me, it's not that significant. It's not that significant. It's just sort of chopping around a little bit, right? A little bit of chop. Okay, let's keep going. Let's keep going. How did everyone go with theirs? Where are you on yours now? I'm very curious where everybody finished. Okay. Let's finish with the VIX. And we get to the VIX, and the VIX is doing, whoops. What did we have? We had a higher high. I'm going to score that minus 0.25 point. And we have a potential for a higher low. So if Monday we have like a iffy start, and then on Tuesday we have a negative day, that's a higher low. That's concerning. That will lead to a hedge. But for right now, because of that higher high, I'm going to drop mine 0.25 point. 1.25. It's definitely still a 1.25, not 125, but a 1.25. And we are flat. Okay. Yeah, it was a tough range to think about. I thought it could drop quite a bit. I thought we could have lost on volume, lost on VIX, lost on one other thing, but I didn't. Yeah, okay. I live with that. 5.25. Where's everyone else see it? And let's get to the watch list. Sandy's reminding me that I better get cracking here. I'm going to take too much time. I'm looking at both. Even the bodies. If you look at the body on this thing here, this is open at 17.4. This didn't get as high as 17.4. Even the body on this day is higher than the shadows on these days. So this clearly higher than this. Make sense? So I'm fluid. I will sometimes look at bodies, sometimes look at shadows. That's how I'm seeing that. Okay. Apple, you might still be carrying a piece. Archer Daniels, that just got going. Finished strong though. I think when the alert came out, it was closer to 62.50. It's got a little bit of run already. That looks strong. That looks good. That's our new trade from Friday. Amazon, pausing. APH, pausing. AXP. I like AXP. On the list. AXP looks like it could be in a consolidation, maybe ready for a trade. BAC, same way. Even though financials got a little bit hit on Friday, one day is not going to shake me out of the entire group. Look at BTI. BTI, that's a maybe. A little bit defensive, but there you go. Citigroup. Citi had a nice looking signal and it completely turned the other way for a bit of a hiccup. Still looks okay. We'd like to see that thing complete pretty soon. Caterpillar. I thought about that. CCJ. It's a little choppy, a little sideways. CELH. I'm still looking at CELH. It's moving around at its highs, but I think it still has some bullish potential. CLS was just amazing. These last 4 days have been amazing. Capital One. I'd still like Capital One. I still think that looks reasonable for a setup potentially, especially as new credit numbers come out. Coinbase, no. Cisco. Man, I was looking at Cisco and then it did this and I'm like, I don't know now. I'm going to hold off. I think Delta still looks viable in a good level, in a good place, good sector. Dash, no. EA, a little bit down. EXPE. Looks bullish. It's just kind of chopping around. Not a lot for an entry. Ford. I think Ford looks good. Futu. I still like Futu. Futu Holdings. GE. On a consolidation, I would trade it, and it's an industrial leader for sure. Gold is just made a huge run up. It was so flat for so long. You know I love Google, but we need a pullback before we can think about trading this again. Goldman is flat. Hasbro, I would still be thinking about Hasbro actually. Hood, no. Howmet, no. IBM, no, not yet. But it's trying to do something down there. We'll see. Intel, pretty choppy still. IWM, no. I mean, I guess actually IWM looks okay. KKR, I'm kicking KKR off the list. It was only there for a little while. Levi's. Levi's looks great. Setting up. Nice consumer discretionary. Light took off without us. I'm going to keep it on my list, but it's hard to want to trade that when it looks so strong. So overextended. Las Vegas Sands on my list. Meta, I'm a little iffy there. Morgan, I would say Morgan still looks okay, but it's not really a setup yet. You got to be patient for that. Microsoft, no. Micron. Look at Micron. Northrop Grumman. I'd still put NOC on my list. Nvidia. Not really holding that 50-day. PGY. Choppy, but still moving higher. PLTR, no. QQQ. Looks okay. Roblox. I think Roblox actually looks like it could be setting up for something. Let's put it on the list. Reddit. Still going. Reddit made an amazing catch-up move. Hopefully you still have at least a piece of that. RF. Setting up. I like that much better than KKR. Rocket Lab. Looks like it's setting up for something there. Trying to bounce off that 50. Silver looks bullish but overextended. SoFi. SoFi is strong in the financial sector. TME. I still like TME. I still think it could be setting up for a secondary move. Tesla, TSM, trying to make a move there. Uber, down but holding the 50. Visa, not good for Visa. Walmart I would trade on a pullback. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. It's a good list. Could Roblox be taken as a continuation trade? Honestly, I would actually, because it's got these 2 days of already, and this just crossed, my thought would be let's Let's see what, if it's flagging or if it pops down into here and then turns, and we get a little bit of this making this, and then we think that's what we're looking for. Yeah, let's give it that chance. Let's give it that chance. Trading plans. Trading plans. We are now moving on to section 2. Market forecasting, which is what we just did. Do you have this developed as a routine where you look at these 6 as a minimum? If you said, you know what, I'm also going to put the 10-year bonds or long-term versus short-term for the yield curve, or, is there more you could add? Sure. If you do, you have to think, how do I add it? Do I score it? Do I score it and give my score a bigger score, or do I just, I certainly look at things after I score to say, how does this impact it? But what we have is just a nice starting routine. It's strong. It's allows us to be objective and, take into consideration some of the more important aspects of the market. So, yeah. I feel like we have a solid routine. When we're done, we finish with a market posture score. Posture is, how do I feel overall? Overall. Trading posture, we're going to talk about tomorrow morning. Trading posture is, how do I feel right now as the market's getting started? So my market posture is bullish, but I'm not like, hey, let's just go fling a bunch of bullish trades on. We're saying, hey, we have to be cognizant of support and resistance and momentum. And the support, resistance, and momentum is what leads to trading posture. Then we have the implications of all of this. What types of trades? How long should they last? How do we adjust our risk management? What kind of strategies or systems make sense in this market? What kind of tactics should I have? And when I mean tactics, I mean, do I set a tight stop or a loose stop? Do I move to from stage 2 to stage 3 where I start to adjust my stop sooner or later? Do I take a third, a half, a quarter? When I get to profit-taking levels, when I start adjusting my stops, how tightly do I do it? All of those things are my tactics, my trade management tactics. And those are influenced by the market. So there'll be some markets where I say, I'm not going to take a loss easily. I'm going to let this thing go a little bit, which means when I take the loss, it could be worse. So those are all things that we want to be aware of. Lastly, not leastly, hedging. And we are in the midst of a potential hedge setup, so we want to be aware of that. Real quickly, El Jago wanted to clarify he meant Reddit. It's about halfway up to what we were kind of thinking, but if you did it, you could say, yeah, you've got a couple of candles here. That would theoretically work and then allow you to tighten your stop as it moves higher. Yeah, I think that would be a potential for something along those lines. So we've got a few trades we're carrying. We've got a potential hedge signal setting up. We've got a few trades setting up. So what do we have? We have a pretty good bullish market. We're hoping that we're leaning into a increasingly dovish Fed that is going to cut rates this next, not this week, but the following, right? I believe it's the 17th. That's my story, and I'm sticking to it. It's good to see everybody. Wrapping it up, only 5 minutes late. I feel pretty good about that. I will see you guys tomorrow morning. There's my reminder to water my bonsai. Got to go do that as soon as we're done here. Have a great rest of your Sunday. See you in the morning. As always, happy trading.